Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, welcome back. I'm with Willem Middelkoop, the founder and CEO of Commodity Discovery Fund. Willem, good to see you.
Yeah, thanks for the invitation.
No, more than welcome.
In cold Toronto.
Yeah, I know, it's blistering cold. Look, I wanted to bring you on because I think you've been one of the better performing fund managers, but not just in the last year or two, but actually for a prolonged period of time. Obviously, we're at PDAC and Explorers Conference.
We've been around for a while now.
You've been around for a while. Well,
I'm getting older.
How many PDACs have you done? You must be on a...
Oh, I think the first time I was here was in 2006.
2006, okay.
Yeah, it was almost 20 years ago.
20 years.
And then I was a private investor. Actually, I had a newsletter at that time, the Middelkoop Discovery Alert. It was a news service on drill results and discoveries. And then I had a banker friend, and he said, "You're stupid. You sell your best tips for $150. So you should start a fund." And that's how it all happened.
Okay. And how's that fund going now? Because you've been seeing inflows year on year, which not many people can actually claim.
No. Well, we started, in hindsight, at the top of the last cycle in 2008. 2008 was a great time to start a resource fund. And I knew, actually I was scared for a coming crisis because I actually published my first book in the Netherlands in 2007, warning about a pending dollar housing crisis in the US. So when we started the fund in the summer of 2008, I was a bit scared, and 3 months later, after our start, Lehman crashed.
Yeah.
And then it turned out it was the top of the last commodity cycle. So actually in the last 15 years, we only experienced a bear market. We had 4 years in which we saw recoveries. After the Lehman crash, 2009 was a recovery. 2016 was a recovery, but it only was 5 months.
Yeah.
Then 2020 was another recovery year.
Yeah.
There was a recovery of 6 months. But we've been fortunate to see net inflow every year of money coming into our fund. So we have a very loyal, high net worth retail base in Dutch-speaking countries.
Yeah.
And we see inflows really picking up now this year.
Good, okay. One of the main things I really wanted to talk to you about was, obviously we're in quite an uncertain time at the moment. I don't know, I was thinking about this when I was talking to someone else the other day, where it's really, I think the amount of uncertainty around the globe at the moment is probably akin to what, the Cold War, probably? I don't think we've really been in a...
I think it's even worse.
Yeah.
I think we're witnessing the largest geopolitical changes in the last, especially since the end of communism. But if you look on a broader perspective, I think we're entering the largest changes since the end of the Second World War. You have this 80-year cycle, you know, the fourth turning, Neil Howe's famous book, and he describes that every 80 years you have this real change of sentiment.
Yeah.
And often there's a new world power coming onto the stage. So 80 years ago, there was actually 1945. US was the winner, came out as a winner of the Second World War, started Bretton Woods conference in late 1944 and proposed to use the dollar as world reserve currency. And now, exactly 80 years later, you have China knocking on the door with the BRICS countries, and we've seen the most significant regime change ever in the US now, and this is not a regime change organized by the deep state, it is a regime change organized by the resistance. So actually we have like a civil war in the US.
Yeah, I mean, it feels like it, doesn't it? The amount of opposition to new government departments. I mean, the opposition to John Kennedy coming in, and
it's unprecedented. We haven't seen that in 80 years.
No.
And even before World War II, I think we haven't seen a situation like that. You need to go back to the first Civil War, which is actually way larger, to have such a divided country. And even some guys from the current administration said this is a civil war. Peter Heck said, he said it's a civil war without guns.
Yeah.
Well, it is a civil war.
So obviously usually when you see these when you see a big shift in economic powers going from one nation from number 2 to number 1, in the past we've always seen a large international war as a result of that. And I think that's part of the factor, surely, that why gold is on such a bull run at the moment. Obviously, Ukraine and Russia, you've obviously the Middle East as well, the season of Russian assets. There's been so much that's been fueling this and the central banks buying. But for an investor like yourself, how do you play the market now when there's so much uncertainty? Do you just hedge yourself all on gold, or how are you looking at things?
Well, first I would like to say a bit more about the general investor. Gold bugs like ourselves have always been interested about gold. Actually, I've been writing about this for the last 25 years, explaining that one day the US would learn that they actually broke. Even Elon Musk has said it recently in an interview with Joe Rogan. The US is almost broke, so they need to cut down. And when there's so much uncertainty and so much chaos, then the general investors, many of the general investors, institutional investors, will only look at gold when there's chaos and the smell of war in the air. And that's what we have now. And that's why you see this huge run on gold. And I think this has only just started. The LME is in a technical default because the contracts which are supposed to be delivered T+1 are now T+50, 60, 70, 80. I think it's just the start of a huge revaluation of gold. I've been talking about revaluation of gold for the last 15 years. It's one of the core theses from the Big Reset, which I published in 2014. And how do we position ourselves? Well, we always have had, let's say, at least 70% of our positions have been precious metals related, because we always expected that because of the debasement of currency, which is continuous and ongoing, the flight to gold and the upward trend for gold would be continuous as well. And we really positioned ourselves very early on in this game by not buying the physical. I've been doing that myself, buying physical gold and silver. I actually started the bullion web shop in 2008, sold that in 2011. So I've been running around for a long time in this industry. But I learned at that time that it's much smarter to position yourself and buy the ounces in the ground. Yeah. We position ourselves in companies where ounces in the ground are valued at $7 per ounce.
Yep.
$7 per ounce. And accumulating as many of those reserves and positions, that has been our game. And that has been a losing game in the last few years because the valuation is still coming down, but that's a blessing in disguise, because one day when there's a real flight to gold and they can't deliver it anymore, we see the first signs of that, then people will start to look who's owning the ounces and where are they stored? Well, they're stored safely in the ground. It's the safest vault you can have. Even an earthquake can't kill it. And that has been our strategy for the last 15 years. And actually we studied worldwide what are the best undeveloped projects. And we own Greatland Gold, who has this huge discovery in Australia. But we own position worldwide, so we really studied what are the top 50, top 100 of best undeveloped projects, not only in gold, but also silver, uranium, copper, because the battery metals are starting to become more and more important as well, also from a geopolitical point of view.
Yeah. I guess there's a lot to cover there, I guess, but on the gold side, obviously we haven't seen retail investors really purchasing gold. It still feels to me, you talk to most people on the street, I'd say 1 in 100, 1 in 1,000 probably own gold, if that.
Well, but there is a group, there has been a group who were early and listen to guys like myself and have been buying a lot of physical. To give you an example, in the Netherlands, we have over 1 billion of physical gold and silver stored in private owned vaults. And that's for a small country like the Netherlands, that's huge.
Yeah, I think some countries like Switzerland, for example, I think the ratio of who owns gold in Switzerland, for example, would be a lot lower. I think a lot of people over there do. But I guess, is that part of the opportunity, is that we still haven't really seen a mass participation from, I guess, the general market into this sector? And I guess,
Well,
what's a catalyst that would get them involved?
You know, the general market is always like lazy, and when the generalist investor, when the retail investor comes into one space in herds, like now with technology, you're always at the end of the cycle.
Yeah.
So that's time to take profit, and that's why you have these incredible valuations. Look at Nvidia; they're not valued expensively at 30 times earnings. They're valued at 30 times revenue.
I know, it's crazy.
That's crazy.
Yeah.
And I've been a journalist, a market commentator for Dutch TV in the early 2000s. And I remember warning our audience back then in 2000 that Yahoo was trading 170 times earnings. And then we got the tech bust between 2000 and 2003, and they all came tumbling down between 80 and 99%. And I think we can expect a huge sector rotation out of tech. I think we're topping out now in the tech space, and many people, especially the more seasoned and institutionalized investors, will understand that the free cash flow, the license to print money now in the gold producers, will give incredible margins and profits, and it's a no-brainer now.
Well, before we go on to producers, because I do want to talk about that, I want to talk about a few large companies I'm sure you'd be following as well. But you were talking about, you look at the top 20, top 50, top 100 discoveries. When you're looking at, because obviously some discoveries, what stage of discovery are you getting involved? So is it first drill hole, something looks interesting, you're getting involved then, or are you waiting for resource delineation? Or
we prefer a wonderful discovery hole, like the one with Hercules Metals in October 23, when they were working on a silver project in Idaho, drilled a deeper hole into a IP target, and found incredible amount of copper. That's a blind discovery. We went in within half an hour after trading started. I think within minutes, and start to build a position, and now own over 5% of the company. So that's what we are specialized in. We have a wonderful team of researchers, really worldwide. We have Samson Lee in Hong Kong. We have Martin Katzberg in North America. We have Neil Edgehead, which is a quite famous geologist. Yeah. So we have this app group in teams, and we alert one another when we see some spectacular news or when we see a great research report. So our whole system is centered around discoveries, and as explained, I once had the discovery newsletter, so that this has always been my passion. This is where the value is created, and we've made many mistakes as investors, but despite all these mistakes, we're still around, and we're one of the largest in the industry at the bottom of the market. So.
Yeah. One of the things where sometimes you do see is that you'll see that discovery hole within a day, you'll see a massive re-rating.
Yeah.
And then it almost tops out at that point for a couple of years. I'm sure you've seen that.
Well,
before.
These are the one-hole wonders.
Yeah.
But on average, you have this discovery cycle that takes on average a few months to a few quarters.
Yep.
Then it tops out, and then you see a sideways pattern, because then they need to do the studies, and that takes a while, takes years actually. And then when they start production, you see another re-rate. So we play both of those re-rate phases.
Okay, so like that Lassonde curve type approach. So you're going in sort of as they make that first discovery.
Massively.
And then once they've got their permits, or is it, or do you know, because construction's a risk as well, right?
Once they're topping out after the discovery phase, which is, you can see very clearly in most of the graphs, but sometimes you have the real world-class discoveries who just keep on going.
Yeah.
You know, but we watch the trend. As long as in this upside trend, we stay in the stock. And once we have the confirmation has been topping out, We sell, let's say, half or 2/3 of our position. We always keep a core position if it's a real strong discovery, because there's always the risk of a buyout.
Yeah, of course.
During the softer times.
Yeah.
And we often participate in the private placements, which will always come with these discoveries. So because they always need money to develop it. So taking profit and then coming back in during a private placement where you get a warrant, that really helps to get extra returns.
And then how do you see construction risk? Because I've invested in companies where they've got the permits, they've got the capex, they've built, or they're in the process of building, and then oops, we've misjudged it. We need another 500 million to get the thing done, and all of a sudden everyone's holding the bag, right? So, at what point do you want to see first gold pour before you then get back in again meaningfully, or at what point are you?
What we normally do is we start to come back in 18 months before production starts.
Okay.
But then we watch the cash flow or the cash situation very carefully. So if we think they'll need to do another financing, we keep our position quite small, but sometimes these guys, they have 200 million in cash. And for example, a great example now is NextGen Energy, who are about to start building their massive uranium project in Saskatchewan. Well, there might be the risk that they will need to do one more equity raise, but maybe they don't even need to do that. And their valuation is so low now. People think they're expensive because they're valued at $5 billion. But if you look at their free cash flow, once they start a production, and production could start around 2030, their free cash flow will be over 1 billion every year. So the current valuation, I think...
Is that at current uranium prices as well?
That's with current uranium prices.
Wow, okay.
So uranium prices will go much higher probably. So in the next 5 years, it might go much higher. So you end up in situations like this, where the valuation is sometimes 1 times earnings or 1 times cash flow, free cash flow. And
I guess it's, again though, it's I think a lot of investors, unless you're in a fund like yourself, a lot of people don't want to tie their money up for 5 years until that happens, right?
But that's great being a fund manager, because as a fund manager, you always have a long-term perspective.
Yeah.
As a private investor with not that much money, you always want to chase the next big thing or the better opportunity. But like ourselves, we have over 150 million Canadian assets under management. We need to find positions where we can stay in for years because it's too much money to shovel around within a few weeks. So we're very fortunate that we need to be long-term investors, and we try to trade as little as possible. And to condense our portfolio into a few dozen real sizable positions where we play the long game, and it's almost hold on for dear life, because these positions are so wonderful. Look what happened with Ivanhoe Mines. Ivanhoe Mines was valued just over 10 years ago, 250 million. It's a 25 billion company now. But the same with NextGen Energy. We bought our first position when it was valued, I think, around 20 million, and now they're valued at 5 billion. So there's so many of these stories. And the longer I do this, the more I'm convinced we really should focus on the world-class stories and stay in almost forever, even after production.
Yeah. It's funny with someone like Ivanhoe, because I was looking at them, because I was actually, what I was trying to think of at the time was, for example, someone like Barrick have Rika Dick potentially going online. I don't know what you think of that, if they'll ever get it up and running or not, but you look at that, one of the largest copper projects in the world that potentially is going to be coming through their pipeline. You look at like a Barrick valuation today, I think, what are they, around 35 billion US? And then you look at Ivanhoe with I think when you convert it to US, I think it's around 17 billion US for ownership of 40% of one very world-class. Less
than 40%.
Yeah, I think it's like 39, 38, 36, something like that. But it's striking to me how high the valuations can go for these copper assets. And it's, I guess how are you looking at it in terms of your asset portfolio, in terms of asset allocation between copper and gold, because you can get such big wins from copper.
The guy on screen, that's me, Ken Conkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McNaughton. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high grade gold system, which initially was one structure and is now four. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
We decided to stop investments in rare earths, scandium, and all these smaller,
Niche
spaces,
metals.
metals.
Yeah.
Because they sound sexy, and but if you study supply and demand, often these markets are just 5 billion a year total sales, 5 or 10 billion. Often there's just one or two producers who cover 80% of the market. So if you make a new discovery, who are you going to sell it to?
Yeah.
And so we decided we stick with gold and silver. Copper, because that's a huge industry and becoming more and more important. And then we do uranium, which is like a niche, but it's such an interesting niche, and supply and demand is so amazing, the outlook. Shortages are guaranteed, and you have all these long-term buyers who need to source their uranium. It's the only fuel they can use for their power plants. So this is an amazing industry, and we have around 7-8% of our portfolio in uranium. We have around 15% in copper, and then we have like 70% in the precious metals. And we do a bit in lithium as well, because lithium will turn into a $100 billion industry as well.
Are you worried at all about oversupply in lithium?
Yeah.
Obviously, we've seen that 2023. We saw a correction, a massive correction again. You've seen these cycles of lithium. It's almost.
It's like Bitcoin.
It's almost like Bitcoin, where you see these bubbles almost.
They always go down 80% and shoot up a few %.
Yeah. What do you think of that space? So because obviously has it bottomed out again? Do you think?
Yeah. Well, it's starting to bottom out.
Yeah.
The bottoming pattern can take a few more quarters, but I expect the start of recovery within 12 months. But there's one risk out there. We need a lot more lithium, because lithium will be needed for the EV revolution for a long time, for decades to come.
Yeah.
We'll phase out the cobalt, and we might need less nickel, but lithium is here to stay because it's the lightest metal.
Yeah, and there's abundance of it as well, right?
Yeah, and we know the increase of car sales in EVs and hybrids, it's still going hockey stick. It's still the hockey stick. So there's much more needed. So probably all lithium will be needed, but there's a new invention now. You have the DLE extraction method.
Yeah.
You can extract lithium from old gold oil projects.
Yeah.
Even Exxon is
I've seen
active
this,
now.
Yeah.
But the jury is still out whether that's real competition for the brines and the traditional lithium producers. But I think we need all. It's almost like the energy situation. It's not a question whether you like wind or solar or you want to do nuclear. We need all, you know. If you see the broader picture and you go out 10, 20 years from now, you'll see you need it all.
Yeah.
We don't have the luxury to choose, and I think lithium is the same. We need all. If you see the supply and demand studies, in 2035, 40 new lithium mines are needed to bring on enough supplies. We don't even have 40 new strong lithium discoveries available to build mines.
Yeah, it's incredible in a way though, isn't it? Like you saw a few years ago, you were seeing sort of DSO out of Australia, sort of just getting spodumene onto ships and selling it at record price.
Yeah.
I think 1 year, was it 2022, 2021?
Look at Pilbara Minerals.
Well, Walkabout as well, but
Yeah.
I think at one point there was more. The lithium producers made more money than all of the other mining companies.
And you know,
on the
lithium
ASX.
isn't scarce.
Yeah.
Lithium is abundant. You can find lithium everywhere. But that's a mistake we made, because in 2015 and 16 we studied this and we found it's abundant. There's not a shortage of lithium.
No.
But there turned out to be a shortage of available lithium, produced lithium, available for the industry, and then you get these spikes. So it was the most difficult metal for us to play, because the first times we had the cycles wrong. Now we think we understand it a bit better, but we only have like 2-3% of our portfolio in lithium now.
Okay,
and
that,
we
that
wait.
still could make a big difference if it changes.
If it starts to run and makes another 300-400% run, but we watch it like hawks, and once we have a confirmation of a breakout to the upside, we'll grow our positions rapidly.
Yeah. One of the other topics I wanted to talk to you about, I guess it sort of loops us back to where we started in the beginning of sort of these uncertain times. How do you see this relationship with China dominating the critical mineral space? I know you do focus a bit more on precious metals and copper and whatnot, but it seems to me like we've been talking about this in the industry for about 4, 5, 6 years now, where everyone understands that China have complete dominance over most metals. So you look at graphite, you look at manganese, you look at the processing of nickel, you look at even processing of things like lithium as well. It's the downstream, all of it really comes out of China. Do you think Donald Trump is serious about doing anything to change this? Obviously he's talking about mineral deals in Ukraine and whatnot, but he's got to go and explore and build these things. This isn't going to be a quick fix. It just seems to me like it's still a little bit sluggish in the West, and do we even care anymore? It's sort of getting to that point.
It's a great question, and to answer it correctly, we need to go back to the big picture. We're reaching the end of this 8-year cycle where the US is world's hegemon and is the owner of the world's reserve currency. We're moving away from a uni to a multipolar world. Even the new administration has acknowledged this. This means China is becoming a competitor for the US. The US doesn't like competition, so the US regards China now as his enemy.
Yep.
And that's why they started like an economic war against China. So even the Dutch, we're not allowed by the US to send our wafer steppers, ASML wafer steppers, to China. So this is a war started by the West. The West has been sleeping at the wheel for the last decades and weren't aware that China was responsible for, I agree with your analysis, 50 to 90% of the downstream of all these critical metals, not because they own the mines, but because they own the refineries.
Yeah.
So they almost have a monopoly. So now the West, Europe is always following the US, so now the West regards China as an enemy, also because China sides up with Putin. They don't deliver military stuff, but well, economically they are aligned.
Yeah.
So we regard China now as an enemy, and when you're in a potential conflict and there's your enemy, you don't want to be dependent on your enemy. So That's why the West is trying to create its own mines, supply of all these metals. But you know the industry a bit. That takes decades to build it.
And
you
it
can't
also,
build it in a few years.
Well, exactly, and it just seems like a feeble attempt at the moment. Because if you were serious about it, you'd have to put to, what, 100 billion, 200 billion, 500 billion to really go and do this, right? What?
But actually, I'm invited here at PDAC to go to the Netherlands Day. Even the Dutch minister is flying over to Toronto to be in a little room here, to explaining to the world how the Dutch will solve this situation. You know, we can't do anything. And actually, they've been asking us every month now to come and do roundtables and brainstorms. And then we tell them, guys, we've been doing this for 20 years. We've never seen anything from your side. We don't need your support.
No.
But don't think you can change the situation in a few years' time, you know. It's too little too late. You don't understand the business. So I'm very harsh on them and direct because somebody has to be honest, because it's the politicians who say we need to change, and then you have all these people around them clapping towards the the leader that we're on the right track. And it's insane.
Yeah, it is a bit, and it's. I just think there's so many other things going on in the world, and especially with Ukraine and Russia, especially with the Middle East, it just feels like it's not a priority. And even though everyone in this industry bangs that drum, that we have seen some investment from DoD. I think, obviously, we have had the IFC who've been investing in the space.
The US has been very active.
They've been a bit more, yeah.
And we see it in investments we have in companies, exploration companies, development stage companies who have projects in, let's say, Alaska or Idaho. The red tape is being cut massively. And
I'm just wondering though, does the amount of capital come in from, and should it fall on government? I guess what's the final outcome here is really what I'm trying to get to, is if we don't invest enough into critical minerals in the next 5 years, what's the outcome in terms of our auto industry and our economy?
Much higher prices. You know, it's very simple. It's supply and demand. So if we need more copper, we need as much copper in the next 25 years. Actually, we need double the amount of copper we've used in the last 2,000 years.
Yeah.
For the next 25 years.
I've seen that, yeah.
It's technically impossible to produce that amount of copper in that short of time. Robert Friedland did a keynote in Miami. I was in Miami last week at the BMO conference. He did a keynote. We need to find 6 Escondidas, which is the largest open pit copper mine in the world, every year. We need to find 6 of those every year.
And build them.
And build. You know, it's technically impossible.
Yeah.
So what will happen? Price will go up. And even the CEO of Glencore said, we won't supply any more new copper. We won't open any new markets, mines, before prices reflect the growing demand. So the CEO of Glencore, one of the largest copper producers and traders, is telling investors, is telling the world the copper price will go much higher. And that's why we are positioning ourselves in the largest still undeveloped copper projects. And that's why we own over 5% of Hercules Metals, who's finding a new copper district in the US. Well, how often do you find a new copper district in the US? That's quite rare. But that means that the opportunities for guys like ourselves, who are opportunistic, you know, are amazing. So we survived 15 years of downturn. We'll enjoy 15 or 30 years of a bull market. I'm 62 now. I want to end like Warren Buffett, being 94 and still running the show.
Well, I even though, like you were saying, we saw a little bit of an upswing in 2016.
5 months.
For 5 months. I think that's when gold got to about 1,600, wasn't it? And then we saw some in 2020, just as we
6 months.
Again, 6 months. But I've never seen a bull market in this industry.
This is what I always tell in our office.
I'd love to see one.
all the people in our office we hired after 2011.
Yeah.
Because in the first 3 years we're just founders only. All the guys and girls in our office are children of the bear market.
Yeah, I feel it.
They can't imagine a bull market. I experienced the bull market between 2000 and 2008. I was a private investor. I was starting to learn the trade. And people will be shocked how much money
I think it's
will
very
be made.
easy to get pessimistic being in mining when you haven't seen a bull market. That's my takeaway
But
so
even
far.
the older guys who experienced the bull market between 2000 and 2008, the damage and the trauma caused by the downturn since 2008, they're different persons.
Yeah.
And fortunately, I'm a blue sky guy. You know, I always see the upside. I'm always positive.
Well, it also helps that you're able to make money in a bear market,
Yeah.
which not many people are, which is pretty.
I've been very happy in the last
Yeah.
10 years, and they were tough years, but
Yeah.
I was always quite happy. So I always tell myself, if I feel this well during a bear market,
Imagine what you'll be like in
Yeah.
a bull. Yeah, exactly.
yeah, and,
I guess final thoughts. Obviously, we're at PDAC. You've mentioned a few any companies that you're dying to go and have a look at, or are you just going to go walk? Are you going to walk downstairs? You're going to have a little mosey around,
Well,
see
you
what's
know,
going on?
if this is your business, I just come back from the BMO conference in Miami. We have so many opportunities to talk to these companies, to see them. We know the best discoveries so well. We're not going to find a very new discovery here at PDAC.
Yeah.
So it's just about meeting up again, maybe see some core, but I'm a non-technical guy, so you can tell me anything. If it's shiny, I think it looks good. So this is not like a big show for us where we invest tons of money or get great ideas. It's more 5 of the people in our company, our whole research group is here. So we have a dinner tonight. That's the first time ever that everybody from all over the world is in one room having dinner.
That's great.
So that's great about PDAC. You can meet a lot of people here. It's efficient. We never met, so you have all the media here.
Yep.
So that's the value for us.
No, awesome. Well, Willem, enjoy yourself, and thank you very much.
Enjoyed it. Thank you.